A standby note is your key to buying your first business. So what does it mean for a note to be on standby? Now, standby is when you're not required to make principal and interest payments on a loan or a note. Now, there's two types of standby. There's full standby and there's partial standby. Now, full standby just means there's no principal and interest payments being made. In other words, you're not paying anything. Partial standby is interest-only payments. Now, a standby note is the cheat code to buying a business because according to SBA rules, a seller note that is on 24-month standby can count as the down payment for buying the business. So in other words, the seller can make part of your down payment. And sellers are very open to these structures. We do these deals every day. It's even possible for a note on full standby to be excluded from the debt service coverage ratio of the bank, also making it easier to qualify for the loan. But you need to make sure that the business is going to have enough cash to start making payments when the time does come. So for SBA-backed loans, the required down payment is 10%. But according to SBA rules, none of that needs to come from you, the buyer. So there are a few ways that you can come up with that. One is, of course, you can get investors to put 10% down. Obviously, you could put 10% down yourself, but also you could have the seller roll equity, meaning they sell you 90% of the company and they keep 10, or you get a note on 24-month standby, which typically it's much easier to get the standby note than to get the rollover equity or to get the investors or to come up with the money yourself. Now, the SBA rules allow for 0% down from the buyer, but banks are allowed to set their rules a little bit more strict than the SBA requirements, and virtually no bank will do a 0% down deal unless you are currently working in the company you're trying to buy. So if you're trying to buy a company that you currently work for, yes, you can do a 0% down loan. You can roll all your costs into the loan. You're going to really have to come with very, very little, if any, cash to the table to buy the business. For everyone else, if you're buying an industry, you have really good experience, you have good management skills, you're going to do 2.5% from the buyer. All other deals are 5% down. So it's not zero, but 2.5% down is a lot better than having to put 10% down. So if you can get that 7.5% of the total purchase price or total project costs in the form of a seller note on 24-month standby, then you only have to put 2.5% down to buy your business. So check out our profile if you want more videos on buying businesses, and reach out if you want to buy a business together.